Hey, Job here. On this channel, I invest 100% of my income into growth and high yield income ETFs to create monthly cash flow that will eventually cover all my expenses and replace my salary. As you can see, I'm making good progress on this. Like if we take a quick peek at my income portion of my spreadsheet that we'll go over in detail later, making 5.6K a month, 67.6K a year, 1.3K a week, and $185 daily. So if we add this to my salary, my current salary is 175K. If we add up my dividends to that pushes up my total comp to 242.6K. If we factor in my 7% annual bonus that I should be getting later this year, that pushes my salary to 187.2K. But if you factor in the dividends, that pushes my whole thing to 254.8K. So pretty amazing. And you can see like the progress that I'm making towards that. Eventually, my goal is to exceed my gross monthly salary target, which I'm currently making now, which is 14.5K. So well on the way there. Definitely some ways to go, but making progress month over month. Right? So this week, we'll go over all the numbers backing this income. We'll go over my week 65 portfolio update since I started this strategy back in May 2025 last year. I'll go into all the details of my performance this week, breaking down how I unfortunately underperformed the S&P 500 by 3.4x with my 3.97% total return loss. I'll check in on my margin health and all my dividends received, and have a quick peek through my portfolio thoughts this week. All that said, get radical transparency on my channel. Whether the market is up or down, you'll see all my real numbers and see exactly how much skin I have in the game for any given position. If you want to follow along, definitely check out the free Snowball portfolio link in the description below. And if you appreciate all that transparency, give a like and subscribe. And as usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. And make sure you have a good read of this whole disclaimer. As far as my weekly flow, you can take a pause here and take a peek. If you want a deep down breakdown of this, check out the video at the top right. But otherwise, let's just get started. So if we pop over to Robinhood, you can see that we ended the week nicely in the green on Friday. So it was up 1.09% or 2.4K. And after hours, there was a little $360 bump or 0.16%. So ended the week at a net value of 231.5K. If we check on the actual week, though, definitely in the red, like I mentioned. So I was down 3.97%. So quite a bit, 9.5K. On the month, it's slightly up, 1.97% up or 4.4K. On the 3 months, I'm up 3.9K or 1.76%. Year to date, still very positive. So up 24.46% or 45.4K. And if we go to all, up 29.41% or 52.6K since I started using Robinhood last year. So pretty positive overall, despite kind of like the recent dips. You can see this is my full portfolio here, nothing hidden. If we pop over to my spreadsheet to kind of take a deeper look at the numbers, we can see here that like if we add up all my assets in the portfolio, so across my growth and high yield income ETFs here, I'm sitting at a 440.6K gross value. So just a slight step down from last week. So things went down, but yeah, given that I'm still adding to the portfolio every week, my full paycheck, that kind of helps buoy things, because I think last week we were at what, 441K in gross value. So just a little couple hundred down in the grand scheme of things, despite everything. Margin used, I'm sitting at 209.4K, and then net value is sitting at 231.2K. So slightly different from what you saw here because this includes the after hours, but this doesn't. If we check in on how things compare on the total return side on the left here, and also just under your unrealized gain side, you can see that stuff is still holding firmly in the green. Most things have kind of flipped back into the green apart from like kind of the usual suspects. So DRAM still slightly in the red here. It's kind of inching its way back out. YMAX actually in the green here, and we'll probably want to talk about this a little later here. Kind of musing about maybe switching that out. We'll see. ULTY is slightly in the red here, and total return down 2.65%. Google just been kind of struggling in the last couple of weeks, again beating down. I'm actually really excited to get some YouTube income in the next couple of weeks so I can kind of buy a little bit of this dip. And then blocks and BTCI made a big run up this week. So these are kind of starting to come out of the red. We'll see if this is the beginning of kind of like a crypto pump, or if this is just kind of like a little bounce up before kind of hitting the low lows. We'll see. And if we If we check on the total profit, that's basically the realized gains, dividends received, and all that against the margin value. I'm sitting at a 111.2K gain, or 48.13% gain. So pretty positive overall when you factor in total return. And even on the unrealized side, just slightly in the green there. So up 10.9K or 4.75%. So pretty nice overall. I see like the two sides of the coin there between a total return and the unrealized gain. So pretty nice overall. Apart from kind of like the NAV rotors like YMAX and ULTY, and just some temporary downsides from Goop and MLPI and things like that. And then crypto has just been kind of getting hammered, but this should kind of bounce back up nicely as it covers back. Hopefully that's where stuff is sitting. Most everything else is in the green here. If we look at how that's split between growth and high yield income, on the growth side, I'm sitting at 190.8K, so roughly 43%, and the high yield income sitting at 249.8K, so roughly 56%. So that one makes up the 440.6K. As far as my margin health this week, so sitting at a 52.47% equity, my gross portfolio value, margin used, net portfolio value, that's all the same. If we take my blended margin maintenance, which is 25% across the board, across all my positions, and apply that to your gross portfolio value, you get this margin maintenance dollar value, 110.1K. So this is the number that my portfolio would have to hit for a margin call to happen. And so that's basically a margin buffer of 121K. So that's basically the difference between the net portfolio value and the margin maintenance dollar value. So really that makes it a 52.35% buffer. So this kind of matches roughly what you see in Robinhood here. So this margin buffer, because they go off the net portfolio value. But like I say, I kind of like going off the gross portfolio value. So if this amount were to fall off the gross portfolio value, that's a 27.47% drop. So, and because of the leverage multiple and the margin amplification, so a 27% drop on all the assets here would be the equivalent of a 52% drop on the net portfolio value, given the leverage multiple. So very important to factor that in. And I definitely encourage you to check this out. And I need to actually I want to put this out as a little free thing, just kind of like this section here for people to calculate this eventually. I just need to clean it up and kind of just put it as its own thing. So you can kind of get a good idea of where you're sitting, how leveraged you are, and how far you are from margin call. So very important to keep that in mind, and why I check in on this every week. There is risk to this strategy, and like I just want to always kind of keep a tight eye on that. As far as my buying power, I'm sitting at 78.6K, so that's the margin total minus the margin used. And then, so this is cash that I could invest in the portfolio if I wanted to, right? But I want to, again, keep my buffer high, so just kind of keep leaving it there. And then if you take half that amount, that's cash available for withdrawal, so 39.3K. So next week, we're actually going to get pretty close to the 50% mark, because next week we have some big bills coming out. So we have the BOA Summit card, so a lot of expenses that came from like the wedding last month and the mortgage. So between these two, that's a big piece, 7.3K. So if we even just kind of quickly factor that in, so like say we add that to margin, so minus 7.3K, minus 7.3K, we'll see that we'll get to like a 50.81% equity here. So quite a bit. We're going to get pretty close, but then I'll deposit paychecks, and then dividends are going to come in as well. So that'll kind of help buoy that up and get that back up. But it's going to be a big one next week as far as bill payments coming out. But luckily there's buffer there, and also part of why I kind of keep that buffer up, so that I'm able to kind of sustain those moves and not get too much trouble there. But it's definitely been an expensive summer, definitely higher expenses than normal, just because of the wedding and a bunch of different stuff that have come up. So yeah, hopefully in the next couple months after that, it'll kind of even out to more normal costs. Definitely missing just the normal 7 to 9K I normally have in expenses. It's definitely been higher than that. But as far as the income, like we mentioned at the top of the video, I'm sitting at $5,635 a month in income. So that's roughly 67.6K a year, 1.3K a week, or $185 a day. So that's roughly a 27% yield if you go off just the high yield income assets, so the 49.8K. If you go off the full portfolio, including the growth and high yield income, that's roughly a 15.6% yield, which is not too bad in the grand scheme of things. And again, this is a big margin balance. This is 209.4K. I'm paying 4.5% interest on that, which is roughly $781 of interest a month. but I'm making $5,635 a month, right? So that's a pretty big margin spread. So 4.8K in margin spread. So roughly a 22% yield after the margin interest. So pretty positive spread. And that just kind of keeps growing week by week as I keep investing into high yield income. So as far as kind of like the yield from that leverage, pretty happy with that for my personal stuff. Definitely some risk to it, of course. That's why I'm kind of always monitoring my margin health, but kind of nice to be generating all that income from that margin. If you're interested in the spreadsheet, definitely check out Gumroad. You can buy this for a one-time fee of $5, the price of a coffee. I kind of like using a combo of this and Snowball just because, especially you see it when I do my full paycheck investing, it's kind of nice to just see what's getting averaged up and down as you update things manually. And I don't know, personally, I get my little dopamine hit in a way when I'm investing and updating my stuff. So that's pretty nice. With Snowball, you don't necessarily get that when stuff is so automated. But definitely check that out if you're interested in the description below. If we pop over to Snowball to kind of take a more granular look at where stuff is. So I kind of split these up a little bit more here. So here you can see my ultra yielders. So that's roughly a 22% allocation. That's in the positive in total return if you factor in the dividends. So that's up 11K or 8.87%. But you see that there is NAV erosion there. And this is kind of helps kind of see it a bit more plainly. So I have 124.7K of capital invested there, but that's eroded down to 100K. So that's kind of a lot thanks due to YMAX, ULTY, BTCI and blocks, which are kind of facing kind of crypto winter now. But as they run up, this should kind of get back into the green, I think. But GIAX and Chippy keep things green here, which is nice. And then I have my high yield income ETF anchors here. So this is in the positive. So you can kind of see no NAV erosion here. That's roughly 33.88% of the portfolio. So up 16.8K or 11.71%. So this is practically all my index plays. Some energy and infrastructure here through MLPI, some gold through KGLD, and some multi-equity things through BCAT, and then Goop's my only single stock one through Google. This is basically taking my YouTube income, investing it in Google, and this is kind of your way of seeing how much I'm getting invested from all the YouTube income. So sitting at 5.1K of that so far since I started this whole YouTube adventure. On my hedges here, so this is just a little under 10% of my portfolio, up 3.1K, up 7.98%. So the goal with this, IELT and CLSE, they're both long short. And this is really just to kind of reduce the beta and volatility of like 10% of my portfolio. So these I'm just kind of hoping kind of stay in this range and kind of keeps this part of the portfolio relatively insulated. A lot more insulated from the market swings. It's been doing their job nicely. When we look at IALT, definitely been impressed. It just kind of marches on, right? Even with the Iran war, I challenge you to find where that dip is from it. There's none, right? Just kind of keeps going up. CLSE matches the market a little bit better, but like, yeah, just a lot less volatility as it kind of does all that, which is nice. So I've been pretty happy with these two, and they make for a nice hedge. And I'm basically adding $200 a month to these instead of gold now. Gold has been wrapped into my income funds here. And that's been nice. And if there are any meaningful dips, I would definitely buy it as part of my growth buys sometimes, but just sticking to that $200 a month there. And then my growth anchor ETF. So this kind of helps provide a lot of the growth in the portfolio as well too, and helps stem any NAV erosion. So that's up 64K or 52% between capital gains, realized P&L, dividends received. So that's roughly 33% of the portfolio. So all of the old faithfuls, VOO, VGT, SPMO, QQQM, VLV, which is pretty new, and DRAM, which is slightly in the red here, but will eventually climb out of there. And that's how everything is split up in the portfolio currently. If we check how that's all doing against the S&P 500, so as I mentioned, yeah, actually worth showing the S&P here. So I was down, 3.97%, right, this week. And then the S&P in the same time period was down 1.16%. So you'll see that's a little bit different here when we compare. So just slightly different there, maybe the after hours, but it's just more to kind of give you a rough idea of the trend. So just like a big dip, just you see that margin amplification at play, right, on both sides. So just as it's kind of dipped down and just kind of kept going. So there wasn't enough successive green days for it to go and outperform it, as I might have in other weeks. So definitely a rough week overall, but year to date, still beating it out, which is nice. So we can kind of see that I'm still ahead there against the S&P. So yeah, not too bad in the grand scheme of things on year to date, still outperforming, which is good to see. But if we see of like what really happened this week, we can kind of isolate it to the week here. And just a deep red here. Semiconductors got hit hard. SPMO got hit hard here. VGT got hit hard. So tech overall just got a beating this week. But the bright shining spot this week was actually gold. Went up quite a bit. Bitcoin, BTCI went up 16%. Blocks kind of trailed Bitcoin, which is a bit disappointing to see. But again, Blocks is not a perfect proxy for Bitcoin. But overall, like if we compare BTCI and Blocks, like year to date, yeah, Blocks is down 22% and Bitcoin's down 27%, even with its run up. Blocks still kind of helping outperform there, but definitely keeping an eye on it. We'll see how it does, if crypto kind of keeps its upswing or not, or if it's just kind of like a little bounce and then keeps dropping off for potentially October lows. We'll see, but cool to see. Definitely like BTCI definitely didn't capture all of that bounce, right? Just because of the nature of the covered calls. If we look against Bitcoin on the week, so it was up 22% and then BTCI was up 16%. So trailed by like 6% there. Not bad in the grand scheme of things, but always good to kind of keep in mind. Like you're definitely capping your upside with covered call things. But I think from holding crypto in all its forms over the years through like cold storage, through exchanges, and yeah, personally I prefer this just because it's more tax efficient. Don't have to, anytime you move crypto, it's like a taxable event and all that stuff is super annoying. So this one kind of nice, and then to still get income as it's kind of going down and buying those lows. So kind of keeps me more bought into crypto as a whole by doing the income side of them instead of just a full uncapped hold. Personally, I know it's different for everybody, but as far as kind of like seeing the correlation between stuff, XPAY and VU actually matched each other, which is always cool to see. TSPY actually outperformed VU, which is always nice to see as well. TDAQ actually outperformed QQQM too. So this is interesting. Like both TSPY and TDAQ managed to outperform their reference indexes. So not getting 100% of their drops, which is pretty awesome to see actually. So whatever they're doing for their zero DTEs working out nicely. OVL dropped a little bit more than VU, and that's kind of like as expected given its credit spreads. MLPI down slightly. So this kind of indicates that like, yeah, the war stuff was probably leaning more towards peace, even though it's not quite there. GIX down 2.1%, ULTY 1.6%, so definitely both underperforming ULTY. YMAX actually positive, which is interesting to see. Goop down a bit as well. DRAM and BCAT up a bit. So cool to see how things perform across the whole suite of things, but definitely a very red week. As far as the income this week, let's pull up the calculator. So we had $442.68 come in on Friday. 686.62 came in on Thursday. 389.40 came in on Wednesday. And 98.15 came in on Monday. So big week this week at $1,616.85. That came in dividend income. Pretty awesome. And we're trending towards 5.18K in income this month still. So pretty nice. Good income week. I think this is, yeah, our biggest week so far. It's definitely, next week's not going to beat it. So pretty cool to see. And then I have those big pieces of bills coming in next week, but then like these dividends will kind of help buoy them. Yeah, all the dividends next week are actually going to be reinvested or pulled out in one way or another. So it's just going to be adding to margin there. So we're going to be on that 50% line next week. Really just the paycheck that's going to kind of help offset it a little bit there. So that's how stuff is looking there. As far as the yield on cost, kind of usual suspects. You see ULTY and YMAX kind of lagging behind here. You can really see that yield erosion from like 62% that I get on the week. That's closer to actually 33% with the capital I have invested. YMAX 40% this week, but yeah, closer to 23%. Chippy actually going up as it's gone up. And then really here you see the old dependables here in the middle. These are all kind of holding up nicely. Their yields are holding up nicely. Their NAV's holding up nicely. So this is what I'm really focusing on this year. A lot more in this center part here to kind of make the income a lot more steadier. And year over year, again, like August, we're not going to beat it. Last year was like a pretty big one for August, so 5.7K, but we're trending towards 5.1K. So yeah, really August and October are the only ones that I'm not going to beat for the rest of the year, but September, November, and December, I think we should beat pretty handily. So you can see here, October we're not going to beat, September we'll beat, November we'll beat, December we'll beat. But that's how it's looking. As far as portfolio thoughts, so we can see here, YMAX has kind of come in and out in green and total return. And then I was just kind of musing earlier today. I don't know if I'll quite make a move yet, but I was talking about it the other week. YMAX and Chippy are actually pretty close in current yield when you look at it. So this is like their average yield. I tend to average it out over the last 4 weeks. And it could potentially be a swap there, like I think in the long term, I believe a lot, like Chippy has come down a bit. MH is a little bit in a bear market, but maybe it might be a good time to buy into that weakness here. So it's like it's had a big run up, right, with the the initial conflict in Iran, but it's come down a lot over the last since July, and getting pretty close to when I bought initially. So at $60. So it might be a good swap to make potentially. Looking at it there, it would definitely push my concentration up to Chippy a lot since semis a lot. So that's the only thing there, but not too bad in the grand scheme of things. So like I kind of modeled it out here. What's nice with the spreadsheet, I can kind of play around with the numbers. So here I kind of zeroed out YMAX, put it all into Chippy here, and my income actually stayed pretty close to the same when you look at it. So 5,635 to 5,623. So just a $10 difference there. I was toying around with even potentially, zeroing out both YMAX and ULTY, splitting that between GIAX and Chippy, so half and half. That would push down the income to roughly 5.1K. If I put it all into, say, GIAX, which is just overall more diversified, more of a 24% yield, that would get me down back under 5K, so 4.9K. So I was just toying around with it. I'm not sure if I'll quite do it. I'm also kind of just fine with kind of taking their dividends and reinvesting into safer stuff, into kind of those monthly payers that are lower yielders. I could also potentially just take that and funnel it into Chippy or GIX if I wanted to change it up. But something else kind of thinking about, kind of running numbers on. I kind of like just playing around with like Testfolio and in cases like that too, where I was just kind of toying around with like YMAX, ULTY. If we did like 50%, and then like GIX, Chippy, all GIX. I'm taking off total return because I just want to look at price, because I'm reinvesting a lot of my dividends. Either some get paid down margin or some don't. So you can kind of see this is ULTY and YMAX as I've been holding, just kind of eroding, but these ones would hold up a lot better. But if we check it, let's say year to date, see how that would also look. So yeah, even if I held Chippy since the beginning of the year, it'd still be up compared to the rest there. If we check it again, actually an interesting one to check would be from when things started dipping for Chippy in July. Let's see here. That would probably be a bit of a different picture. So Chippy actually, it's just been going down a lot, right? But we're seeing here that GIX actually held up pretty nicely over since that time period. ULTY and YMAX actually coming in second here, surprisingly. But I was toying with, just playing around with it. I know people rag on those a lot, but also kind of fine with kind of keeping with my strategy of just taking their dividends and reinvesting it into other stuff for now. Yeah, I could definitely take these losses, and then that would be kind of carryover losses for future years, or even what I could do after that is kind of just sell and rebuy these and then to kind of offset it. But yeah, also carryover losses can be useful in future years if I want to realize gains down the line for something else. So yeah, we'll see. Still thinking on it, but for now, still very fine with kind of just taking those dividends and reinvesting them into safer yielders. But maybe I could change it up too, like I said, and maybe just do Chippy and GIX and kind of funnel it. But definitely, as you can kind of see, even just through its chart, these just kind of go down because they just pay out too much of their yield. So they're really going off the YieldMax name, right? There's this maximizing the yield at the expense of everything else. But at this point, yeah, they're less than 6% of my portfolio, and most of the rest of my portfolio is actually in all things that appreciate overall. So Bitcoin definitely the exception right now, but eventually it'll get there and bounce back from the crypto winter. But that's how things are sitting right now. So that's my light portfolio thoughts this week. Just kind of thinking about stuff. Honestly, this was actually mostly today. The rest of this week, I was just kind of dealing with a lot of stuff with my mom still. She's recovering nicely in the hospital, but still a lot of stuff to handle. But yeah, we'll think this through. As far as the finance video of the week, none this week. Again, just a lot of stuff going on in real life, so life be lifing. I haven't had as much chance to listen to finance videos this week. But has been nice to kind of keep in touch with the members in the Discord. A lot of people that are always kind of posting stuff as they're going, right? People post their member portfolios. Love JG3's thread here that he keeps updated week after week. And just cool to see how people have their stuff broken down, and lots of ways to learn from people, see all my trade alerts. I post everything as it happens during the week. So yeah, definitely if you're interested in the Discord, check out the YouTube or Patreon membership. You can get access for $3 a month. Great community of like-minded investors. And if you want to support the channel and support all this transparency, Give a like and subscribe, and hit the bell notification if you want to be notified about future videos. And if you want to catch up on the last full paycheck investing video, definitely check out the video on the bottom left. And I'll catch you in the next one. Peace.